What is happening? Good morning and good morning. It's another beautiful Tuesday morning for Tuesday training, man. Thank you guys for joining us today. Real quick before we get rolling, you see it right there in the comments. If you're watching this from Facebook, give StreamYard the permission to view your Facebook comments. That way you're not anonymous. I know who you are, and it makes it a little more fun that way. I can communicate with you. So it's a pretty simple button. It should be right up there at the top. Just click on it. You're all good to go. But I hope you guys are having a fantastic day, man. We've got a awesome power-packed show for you guys. We have one of my great friends on the show today, the Tower of Power, the 6'9" guy himself. Landon Mccarter is going to be joining us. But as usual, I like to give you guys a little bit of news in the industry. So I want to share a couple of items for you real quick. First one right up. I like to live in the Medicare space. That's where I make my living. And this has been something that a lot of people complain about in regards to Medicare Advantage stuff is the whole prior authorization, right? Where the doctor basically has to get permission from the insurance company before they can actually treat you. But Medicare, CMS has actually taken some steps to fix prior authorization in Medicare. And I just want to highlight a couple of these for you. We're not going to go through the whole article, but here are a few bullet points that they knocked out that they are working to fix that will basically streamline prior authorization and hopefully remove the large number of people that are getting declined treatment and healthcare because of it. But basically, they are looking right here, number one, to only use prior authorization to confirm diagnoses or other medical criteria and ensure medical necessity of services. So as you guys know, right, Medicare only covers things that are medically necessary. Medicare Advantage, for the most part, runs on the same guidelines. So it's basically they want to make sure that they use prior authorization to confirm those diagnoses and that it is medically necessary and that prior authorization is not a tool to be used to delay or discourage care. They also want to give beneficiaries access to the same items and services that they would under traditional Medicare. That makes sense. So if no applicable coverage rule exists under traditional Medicare, then a Medicare Advantage plan must use current evidence from widely used treatment guidelines or clinical literature for internal clinical coverage criteria. And that obviously is made publicly available. Next, they will establish a utilization management committee. Not sure that I necessarily agree with that necessary, but I know they like to grow the government. So they're going to establish a utilization management committee to review their clinical coverage criteria and ensure consistency with traditional guidelines. And then finally, not to be allowed to deny care ordered by a contracted physician based on a particular provider type or setting, unless medical necessity criteria aren't met. So there's a few items that they're talking about doing to reform this. You can look up this article. I'll actually put it in the links of this video, but this is from the American Medical Association. I located today, but good stuff. And just to kind of mention a couple things why this is important. The AMA found that 93% of physicians reported care delays while waiting for health insurers to authorize necessary care. 82% said that patients abandoned treatment due to authorization struggles, and 34% of physicians reported that prior authorization led to an adverse event such as hospitalization, disability, or even death. So getting prior authorization is definitely something that needs to be fixed because of 82% of patients are abandoning treatment due to that. And then I want to be clear about those 82% that are abandoning treatment. Those are people that had prior authorization request in. That's not 82% of all Medicare Advantage enrollees. That is just those that have a prior authorization item up there. But So that's on that one. I got something for you car insurance folks as well. I don't know if you've received a increase in your car insurance lately. I did. Nothing major, but Progressive went up on my rates a few bucks. Think about $30 a month, which isn't bad considering that's my home insurance and 2 autos. But they did go up. And this is from a small news station out in Pennsylvania, Altoona actually. But this doctor here, Dr. David Cather, a risk management professor at Penn State, says there's 2 main reasons your car insurance are going up right now. He says, number one, he says basically it's because of the pandemic and continuing supply chain concerns. So number one, he says that premium prices, or you actually saw your premiums come down during COVID because there wasn't as many people on the road. If there's not as many people on the road, then there's a less chance that you might get into a wreck. But now that the pandemic is over, basically, right? And there's more people back out going to work. There's more people on the road. I can certainly attest to that because Austin traffic is pretty much back to its usual pace. We are bumper to bumper here. So because of that, that's one reason that your car insurance is going up. There's more people back on the road driving around as the pandemic comes to an end and everybody's out there. So that potential or that increases the potential of car crashes and so forth. So therefore, higher claims, higher rates. The other one has to do with supply chain issues. And some of you guys might remember this, but for a while, like car prices, and they still have gone up. Car prices have been up because it's been really hard to keep inventory on the cars in general, right? Especially for repairs, some of the different items that are needed. So the supply chain issues that we've been having across a lot of different industries, cars was one of them. It basically meant that insurers were standing at the back of the line because it says right here, look, if you're making components for your car, you have to decide whether you're going to sell them to an automaker or an insurer, and the insurers get back of the line. So they've had a really hard time getting replacement parts, which makes it tough to fix cars. And then again, claims are going up. So there's a couple of reasons that your car insurance might be going up. And then one final piece that I found today that I thought was super interesting to check this out. This is an open letter to insurance agents. I found this on a website called the White Coat Investor, which is basically an investment group or investment page for doctors that like to get into investing. Talks a lot about healthcare in this page and so forth. But I thought this was pretty interesting. This is a Dr. James Dahl, and I looked him up because I was curious, what is this gentleman a doctor of? Turns out he's an emergency physician, so he works in the ER, but he has 10 tips for insurance agents I thought you guys might get an appreciative or get a kick out of. But number one, insurance can and should be a noble profession. Sure, I can agree with that, right? Insurance is important. There are risks that everybody can and should insure against. So I'm not going to read every detail in this, but I want to run through these. Under this first one, he says that, look, you don't need to morph yourself into a financial planner, asset manager, retirement specialist. Just do your job and do it well. Fair enough, Dr. James Dahl. Number two, commit to the profession. Frankly, I think it would be better if there were fewer insurance agents. There are too many new and experienced agents, and if you're going to be out there for the long haul, either be in it for the long haul or get out, he says. And he says that get-rich-quick schemers belong somewhere else. I don't disagree with that. We need to get the get-rich-quickers out of here, but ultimately, we need to train some of these new people that are coming in. Number three, get some real financial education, right? If your only financial education comes from the company that hired you, well, you need to spend some serious time studying. And he says that 95% of the training that insurance companies provide for their agents is in sales, not finances. Fair enough. Number four, understand that the best insurance is usually the simplest insurance. Interesting there. And then he goes on number five. I think these two are kind of interesting that they're side by side. But number five, when selling complex products, put the client's interest first. Fair enough. I guess we don't have to put the client's interest first when their products are simple. Maybe that's why he likes the simple ones better. Moving along, number six, become an expert in evaluating insurance policies. Insurance policies can be complex. Unethical and incompetent agents frequently sell misinformed people policies that they don't need or don't even want. So again, I really just think that goes back to the top of being ethical. But truthfully, yes, you should be an expert when it comes to evaluating someone's insurance policy to know, hey, do they already have the best insurance, or maybe is there some improvements I can make for them? Number seven, remember that insurance is not the solution to every problem. Fair enough. Fair enough. It doesn't solve all problems. Number 8, remember that insurance products are rarely the best way to save for retirement or college funds. 95% of the errors he's seen insurance agents make are due to their inability to see that insurance products such as cash value life insurance and annuities are not always the best ways to accumulate significant sums of money. Number 9, choose the right term when selling term life and sell a lot of it. He likes a lot of term life. Says that one of his biggest pet peeves with insurance agents is when he meets someone in their 20s or 30s with a 5 or 10-year term policy and a face value of just a few $100,000 or less. I'm not sure what that agent was thinking, right? This is a person, he's basically explaining that, like, if they're this young and they own a home, they should probably have a lot more term insurance for themselves. And then finally, number 10, realize that you're a teacher, not a salesperson. I think that is very true in a lot of ways. I think sales in general, because of the advent of the internet, the amount of information that is out there, the consumer's already more informed. So if we just act as salespeople, we're probably not doing the best service out there, I think. And I believe that's what he's driving at in a lot of ways, is understand that our primary job is really to educate these folks, make sure they understand what they're up against. But I found this article interesting because, in a lot of ways, I appreciate what he's saying. But another way, I'm like, you're an emergency physician. I'm not going to come in there and tell you where to suture. So maybe stay out of my lane. But some of these are definitely good information. But moving along, I want to jump back into the rest of the show today. We've got, like I said, we got a great guest coming on. I love this gentleman. I've been hanging out with him for quite a while. I met him, I guess it's been almost 3 years now since I met Mr. Landon Mccarter. Met him in a men's networking event, got to know him. The dude absolutely knows what it means to be a digital marketer in this space, and he's here to talk to you. So if you guys are out there doing advanced markets, life insurance, IULs, and so forth, annuities, this is definitely going to be a show for you. So please tune in and welcome. Give a little virtual hand clap for my buddy, Mr. Landon Mccarter. What is going on, my friend?
How are you, my friend? Dude, I was thinking about when we first met. That had to be probably almost 4 years ago at this point, right?
I think so. Well, I want to say, yeah, it was. You're right, because it was at, I think, the 2018 or maybe 2019 8% Nation event.
Yep.
When I
That's what
pulled
it was,
aside,
man.
picked your brain for a while.
Yeah. No, that was good. I started working with Cody about 3 months before that 8%. So that I'll never forget, man, when that 8% happened, and we kind of sort of unveiled what we were doing. I just got accosted by everybody at the conference, and it was fun. It was exciting. And you were one of those individuals that we really kind of connected with, and we've been, doing stuff together for 4 years now.
Absolutely. I remember when you were talking on stage, you were one of the first people I've ever heard talk at that level of digital marketing, right? And really understanding the granular basis of it. And it just struck me really well. And certainly things that I was like, this is somebody's brain I need to pick, someone I need to learn from. So I always appreciated that. And then obviously you've gone on to continue to perpetuate that knowledge. You have a book now and all kinds of stuff.
Yeah. Yeah. So no, it's been a fun run. So, I got my degree in marketing from Missouri State University. Within 9 months after graduation, I started my first marketing company. It was a print publication, basically. And then I started doing digital marketing about 14 years ago. I was a Google Premier partner. I've probably spent $100 million of digital marketing on, all the different platforms. I realized something 4 years ago, that digital marketing was becoming so important to business development and strategies of the future that you kind of had to become niched in order to be successful. So for the last 4 years, all I've been doing is insurance, digital marketing specifically, and lead development. So it's been a fun run, man.
Right on. And today you're talking more about advanced market stuff, right?
Yeah, well, the reason I wanted to get into like life insurance, advanced markets, and all of that is because, whenever we spend, as much money as we spend, $1 million a month on Facebook, Instagram, YouTube, Google, TikTok, Twitter, Hulu, whatever digital platform we can spend, you kind of start to, it's really easy for us to identify pockets of success early. Back in, let's see, 2018 or so, we were one of the first to really roll out Facebook leads as a alternative to direct mail. Cody was even before me when I partnered with Cody, and we were doing $250,000 a month of Facebook leads just with one IMO because we were just early, because it was working, it was scalable. Then Facebook leads have become very, very, very crowded. It's about as easy thing on the planet to do. You can go on a YouTube search and figure out how to do Facebook leads. So it's kind of getting to the point now where you don't need a lot of budget. There's not a lot of barrier to entry, so it's very crowded. So there's sort of new things that people are doing like us, that are like the real marketers, not the failed insurance agents that, decided to be a marketer now and sell leads. There's a lot of that. And so, we're kind of leaning into different, better platforms, and the life insurance and advanced markets niche right now is really, really, really taking off. And so it's just one of those things where you lean into something that's working. When I say working, I mean, it's very relatively easy to get a 2 to 4x return on investment. We have some clients, depending on if they walk into some big annuities and IULs, they're getting, 7, 8, 10, 12x return on investment with a relatively simple strategy and easy budget to get to and all of that. So it's whenever we see those types of little pockets open up, I just like to kind of share, hey, look, this is kind of what is going on. Get on board or miss the wave,
Right
because it's
on.
going to close up.
Right on. Well, I appreciate that. I'm basically going to turn the floor over to you because I know you got a great message, a great training topic that you want to kind of extrapolate on from where you just left off. So, guys, again, if you're out there, if you're doing something in the advanced market space, annuities, higher end life insurance products, take a listen here because Landon's about to drop some gems on you. And with that said, sir, I'm going to leave the floor to you for a bit.
Okay, cool. All right. So let me just sort of first off give the what I would call like the pedigree of like what type of agent that I'm talking about specifically. Because the greatest thing about the insurance industry is that there's really like a million ways to be successful. Unfortunately, sometimes that can be sort of confusing sometimes as well. So of what you're going to do for new agents, et cetera. So let me just sort of give the pedigree of like the type of agent that I'm speaking of today specifically. And then we're going to kind of get into the actual marketing as well. So what I'm going to be talking about today is using life insurance first. So life insurance, like marketing strategies to get into a life insurance conversations. Then if you end up with health reasons or budget reasons why that conversation needs to switch to final expense, you go and you potentially sell final expense, but you're starting with that life insurance conversation. You're not necessarily starting with the final expense conversation. You're starting with life insurance. And then if you're doing your job on the life insurance and taking a consultative approach and not coming across, with commission breath and just, you're doing a job as a consultant and helping people find a product that they need, you should be doing some sort of financial like fact find that could potentially open you up to some retirement products. Let's talk about like annuities and IULs and, maybe some more advanced life insurance, strategies that are more than just like simplified issue term. That's just like sort of in and out. So, that's kind of the core. It's like, you got to first understand that leading with life insurance is an important, position, and then selling FE if you need to and can, and then getting in and uncovering advanced markets. That's the key, because you should be able, 1 out of 3, every 10 deals that you get, 1 out of 3 should probably open up an advanced markets conversation. Now, if you end up with an advanced markets conversation, that's when you start to get the return on investments that you need, because that return on investment is what drives everything you're doing from a budgetary standpoint, from a marketing standpoint, et cetera. Insurance agents are really in need of strategic marketing that is going to drive an ROI. So the expectation that I would try and tell you is that anytime you're at a 2 to 4x return on investment, that's where you want to be. Our best agents are better than that. Our worst agents are breaking even, hopefully, or less, because they don't quite understand. Then it's the lead vendor's problem. Then it's the industry's problem. Then it's the product problem and the up problem and everyone's problem but themselves, because they're not getting a return on investment with leads. I can always tell somebody that I don't really want to work with, and it's if they start the conversation with leads suck. I hate leads. I just have to do it. So it's a necessary evil. It's like, well, you're not quite understanding how the marketing game works, because if you want to scale outside of your warm network and outside of referrals, you've got to have some sort of marketing strategy, period. Like there's no other way around it. Now, what I want to get into now is sort of the strategy that we found the most success with. So one of the things I want to try to really articulate is that Facebook has found its place in the market, and its place is real-time, exclusive, cheap, low intent leads. Now, it still works well in some senior market stuff like Medicare, on some other things, related to specifically senior market. But in general, Facebook is a great way to get cheap, low intent, exclusive leads. So it's like on the value ladder of the marketing strategies, the lowest bottom of the barrel would be some sort of aged lead type scenario where you're working with sort of aged data or leads that have opted in at one point, et cetera. And then you've got, Facebook, and then you've got these other platforms that are really, doing a lot for the market right now. So we still use Facebook in general, but we don't really like lean into Facebook unless that user or that client wants to have like this cheap and as many bats as possible, as opposed to quality, in general. So I talked about the bottom of the ladder. Let's talk about the top of the ladder. In general, the top of the ladder for life insurance strategies for the agent that I'm talking about right now is simply mortgage protection direct mail leads is like really, really, really awesome top of the ladder. Unfortunately for agents right now, it's very difficult to get your hands on mortgage protection direct mail leads simply because the way that those leads are generated is because of the velocity and the amount of mortgages that are going through the actual market. They're basically strategies to pull by county how many mortgages closed. You can look at the bank and you can look at the loan amount. So these mortgages are basically calling out the loan amount, the bank that you wrote your mortgage with, and like your address. So it seems very personalized, and they're dropping it into an IVR sometimes, getting the email call that way, or a direct mail reply card. So the intent of those direct mails, mortgage protection, are really high. The problem is you just can't get your hands on them anymore. So the cost per lead is like 60, 70, 80, 90 bucks. Or if there's like an IMO that owns a mail shop or whatever, I can assure you that those direct mail mortgage protection leads are going to the top tier agents that are closing the highest percentage. So those middle tier individuals that are just getting started, or whatever, for whatever reason, maybe smaller budgets, they're going to be told that there just isn't any more leads. Well, there's much less leads that are coming through. So what's been happening is during COVID, it really taught the market to be able to make large decisions virtually over the phone or via Zoom. And so what's happened with the market is that there still is an appetite to be able to get into a high level mortgage protection conversation or life insurance conversation or advanced markets conversation and close that business almost to the tune of a percentage that you would used to see face to face. So what we've done is leaned into this reality, and we've really created like a lot of campaigns for a lot of clients that are just really, 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 really successful. And so we're using video ads specifically. We're leaving Facebook platform out of the whole mix, and we're using things like Hulu. We're using things like YouTube. We're using whatever we can use to put a video in front of somebody that is not Facebook. And then we're taking that video to a mobile friendly landing page, because that's another reality that we're in. A lot of these individuals are having their web experience via mobile right now. And so what we're trying to do is make and meet these individuals where they're at, which is on their mobile device. So we show a mobile ad. We then take them to a mobile friendly landing page, and then we qualify the crap out of that lead. So we're getting like 13 data points, but more importantly, we're asking their beneficiary relationship, and we're having them type in their beneficiary, and then we're having them declare the face amount of the actual insurance that they want. And so between those like fields and between the video, between the time they watch like the ad, they go through the landing page and they do some other steps, they're spending 7, 8, 9 minutes or so on the actual process, which bakes in a lot of intent. So on like Facebook would be the opposite of that. Facebook makes it so easy to fill out a lead form that you're looking at between seeing the ad and clicking on it and it pre-filling information. You're looking at, you can get done in 45 seconds. So if you're spending 5 minutes answering questions with memory joggers, like who's your beneficiary, and they're typing that beneficiary in, you're just baking in intent. Now, obviously these are more expensive leads in general, but who cares, because the return on investment is where it needs to be. Where you need to be focused on, and your cost per acquisition is the goal. Your CPL doesn't really matter. I can get you cost per leads. I can get you age leads for 75 cents if you really want to go that route. So your cost per lead doesn't really like matter as much as your actual intent and your cost per acquisition, et cetera. So in general, that's kind of what's happening. So once you're generating that lead, then you have a choice of if you want to actually do the real sort of path and like sort of overall system of how to sort of nurture those leads and kind of go down that road. There's really two paths that you can have. The first path you can do is you can just drop them into a spreadsheet and work the leads as normal and just kind of do your thing like you normally would. If you're working with somebody that hustles and understands how to work leads, those, that spreadsheet sometimes is fine. You know what I mean? Because you're getting in touch with them, you're setting appointments, et cetera. There is, I think, in the industry an over reliance on automation I think that people think that automation is going to be like the substitute for hard work, and that you can automate hard work and you can automate follow-up out. That's not the intention of automation. Automation is intended to relieve pressure and stress, not prevent it. What that means is that, what you're trying to do is you're trying to overall speed the lead on these digital leads are super important. So you want to try and have some early automations that kind of pop up in text and email to try and get a actual, like, how do I explain it? Like, you want to try to get some engagement early on, whether it's positive or negative. It's better to get a lead that engages with you than just a lead that doesn't at all, but fill out all the information. So once you get that early engagement, you want to try and pull that out of the automations and then try and pull that into an appointment. The automations are built to sort of work in the background of keeping that lead active and making sure that they're either opting in or opting out of an actual meeting with you. It's better than, like, I'd rather have someone opt out of a meeting and say stop just because for whatever reason they changed their mind or whatever it was, than them just not answer at all and just let you just follow up forever, right? So what ends up happening is you have these automations that are going on in the background that are trying to refresh leads. At a certain point, you're going to disposition the lead as what's called like a cold lead, and you're going to put them on the shelf, right? But there's just churn of 14 days or 30 days or whichever campaign we're on, where we're basically automating and we're touching and we're trying to get an actual appointment and get in touch with that individual. So those automations are super important, but as soon as they engage, you want to try as an agent to immediately pull that out of the automations and get into a personal conversation to try and book an appointment or get them on the call or just have a conversation with them, right? But what ends up happening is you hit a certain point where the automations are sort of done because it's a cold lead, and you let that sort of bank. So we have clients now that will take like batches of about 300 leads, because we have clients that have been with us for 6, 8, 10, 12 months. So we'll take batches of 300 leads or so that are cold leads, but opted in at one point and are real-time and exclusive and still owned by that agent that are living in their automation platform. And we'll do some like basic refresher campaigns that will get another sort of like, it's been cold, things have changed, life experience has been changed. So let's just do like a refresher campaign. So we'll put that in, we'll launch a campaign, and out of 300 leads, sometimes you can get like 40 conversations that are reinvigorated. And then once those 40 conversations happen, you're then able to sort of communicate and try and get those appointments as well. So, this is just a testament to sort of, consistency and working with, an actual marketer. So, Tony brought up, my book, Find Your Marketer. I wrote this book because I really know at the top level of the insurance industry, everybody understands the marketing to a T. Anybody that I know, that is a killer, that understands how to actually like scale their business and build a company and creating a $500 to $1 million a year income, has either found their marketer or is their marketer or has their, like, they understand the marketing component. They understand the inputs that it takes to get the results that's needed. They have the budget to do so, et cetera. And so, this is a real path to success in the life insurance space. And so if you can't really figure out the advanced market stuff, that's fine. Just get with somebody that does, so you guys can share some commissions and share some referrals. Because if you're really taking a consultative approach, you are going to be able to get in this conversation often. So when you have all these automations going, let's just talk about budgets, for instance, just to clear up some misconceptions. So you got to have enough opportunity to sort of get things moving. The budget that I recommend on a per month basis, if your life insurance for just this particular system and strategy, would be about $2,000 to $4,000 a month. If you're at $2,000 a month, you should be able to get about 50 life insurance opportunities that are churning through these automations. You should be able to get a 2 to 4x return on investment. You should be able to uncover life insurance and advanced market, final expense and advanced markets opportunities, also along with selling life insurance, and really just start your path forward, right? So that's the marketing strategy that I see winning the most on the life insurance side. I do want to talk about one more thing, and that would be like pre-booked appointments. So I want to talk only about retirement and advanced markets specifically. So this wouldn't be necessarily life insurance first. This would be annuities and IULs first, which would be baked around and inside the pie of retirement So there's life insurance strategies that are lead development, and there's retirement pre-booked appointments. So we do thousands of pre-booked appointments for retirement every single month. And I actually have a live training. Tony, I don't know if you can see in the chat, I have a link for a live training. It's the secureagentmarketing.com/Jeff Von Kynest. If you could throw that link in the chat or somewhere, that'd be awesome. I'm doing a live training on Friday. That's going to go through how to sell retirement appointments, how to uncover money, how to get to the point where you can like find the money, find the movable money, write annuities over these retirement conversations. So Jeff has been working with us for a while. He's got a 3-appointment strategy. So basically we book the first appointment and then he has a 3-appointment strategy. He has about a 75% close rate that he has on all of his annuities, life insurance, or IUL type strategies. And he's going to walk through his process of how to find money. But more importantly, he's going to walk through his process of how to like illustrate value in the first and second meeting to get to the third close meeting. Sometimes he closes on the second, but there's some specific tools that he's bringing that are not that expensive, that are going to be able to illustrate real time and bake in a lot of value. So like he's got these like this fact find that he does, and then he plugs in these numbers into this online tool, shares a screen, and kind of says, all right, look, here's kind of what I'm projecting. And because he's able to show this very quickly in real time, he gets a lot of people interested in the third meeting. So what ends up happening is he's got the retirement meeting strategy that he like sort of works with us. He takes the first meeting, he gets them to the second and third, and closes like 75% of these individuals. And if he doesn't close them on an annuity, he closes them on a life insurance policy or something like that. So when you look at numbers, I mean, I think he's done, like, in the last 30 days, he's done $500,000 of annuities in the last 30 days, and like another huge chunk of life insurance, and then some IULs as well. So he's going to be going through his actual strategy, but it's not necessarily, we're not going to be talking much about the marketing, because the marketing is already sort of figured out. I can generate pre-booked appointments, as many as you want to take, that are full state. So that's not really the issue. The issue is how to uncover the money, how to feel out what the meeting is, how to get that first meeting to the second and second to the third, and all of that. So that's the two things that we're really finding like the most success with, if we're going to be completely honest right now. We still do a lot of Medicare marketing. It's just not the time of year really to be focused on Medicare. Whenever AEP starts, everybody kind of slows down and gets into grind mode, and then everybody kind of takes some time off. So we'll be kicking back up Medicare and those conversations, in the future. I will say for Medicare, there's different strategies that's not today. That would be a whole nother different sort of conversation that I would get into. But Tony, I've got that's kind of what I wanted to cover. I did want to flash, if you don't mind, I have my Calendly link. If you could kind of flash that. After this, also, I'll put these links in the chat of this actual video.
Already in there, brother.
Okay, cool.
Got you covered.
We already got that. So Tony, what do you got for me? You got any Q&A you want to do, or do you want to call it here? What do you want to do?
Well, we'll probably get a couple of questions roll in, but I'm kind of curious. You said you're advertising on Hulu and YouTube?
Yeah, man.
Are you having to go through a media buyer to do that, or
we are the media buyer?
You are the media buyer,
yeah.
So you just contact someone at Hulu, or
we're an agency. We're an agency, so we're basically have anything that, like, look, here's what I've learned a while ago, about a year and a half ago. I realized that there's a huge market segment in the insurance space that really should not be building their own marketing funnels, because they don't have the patience or the budget to be able to actually put the budget through to get that successful. So what we did is we built this gigantic engine that's just churning out appointments. And so we can basically just have an agent throw their budget into our engine and pump out the appointments and pump out the opportunity, as opposed to, all right, Tony, like, let's build this funnel out for you, and you give me a management fee and I'll do your ad spend. And, and that is, we still do a lot of that work, but
sure.
What happens is this market changes so quickly that we go from, let's just say we start to see a lot of opportunity on Hulu as an example. Well, we already have all the landing pages. We already have all the engines. We already have all the automations. We already have everything figured out. So for us to go do like a media buy to get that information and that content and that website traffic to our stuff to convert is relatively quick. But if you and I were working together, we would have to talk. We'd have to basically redo landing pages. We'd have to set up new automations. We'd have to figure everything out. Well, then if I have 100 customers, I got to do that 100 times. And so
Right.
what ends up happening now is that we're just leaning really heavily on our own existing assets that are branded, that have consumer reviews, et cetera, that are generating the actual lead flow, and then just giving that lead flow to the agent specifically, if that makes sense.
Yeah, that does make sense. You also said you were getting 13 data points on your landing page.
Yeah.
What, if you don't mind, just like maybe what are some examples of some of those data points that you think
Yeah.
are key?
Yeah, let me just read it to you. So basically, it's first name, last name, phone number, the state, the email, the gender, the age, if they use tobacco, the submission time, favorite hobby, the beneficiary info, is it your spouse, child, family, or other, and then they type in the beneficiary name and then the actual coverage amount. So that would be the data points that I'm referencing. We can do more. We have some people that want occupation. We have some people that want income. We have some people that take out certain things and add other certain things. But the way that we look at this stuff now is we have evolved so far past Facebook marketing lead forms. It's unbelievable. Like, in fact, if you're working with somebody that's like focused on Facebook marketing lead forms, you've got to try and find yourself a more advanced strategy with your budget, because we were doing that 4 years ago. That those days are done. It's not necessarily you can't get that work to work, but there's actually cheaper ways to get leads than that, and the quality is even better. So we do Facebook campaigns still, but that would be the data points that we would to answer your question.
Yeah, no worries. We did have another question. He was curious, are you doing anything other than Hulu and YouTube, like any other areas like
Anything
Peacock or
on Peacock,
Paramount, or
Paramount.
anything
Yeah.
like
So
that?
what that's called is OTT. It's over the top advertising. It's digital strategies that you can basically media buy. You can do other like media buys that are like basically think of it like you're buying one media buy, but you're basically on all the different streaming platforms. We're just really looking for where the conversions are coming from. You know what I mean? So we're just trying to just find really any digital source besides Facebook for these particular high intent strategies. And we're just seeing how it goes. And so since we have so many leads, like we probably generated, like since we've been talking, I've probably generated 1,000 life insurance leads since we've been talking on this call, because we have huge IMOs that are fueling their life insurance call centers or whatever with what we're doing. I mean, and hundreds of agents that are working these leads real time. So we already have so much engine. So what'll happen is we might be using Hulu, but if we start to see some actual decline in conversions and increase in CPL, et cetera, we'll just move over to what we know is working. So it's basically just think of it like this: anywhere I can show a video that's not Facebook. And if we have Facebook campaigns, then they're specifically Facebook campaigns, because the client needs to understand that that's a lower intent opportunity that's
Right.
cheap in general.
I guess the part that strikes me interesting, because you had mentioned everything mobile friendly as far as landing page and so forth. So I guess my brain is trying to figure out, are that many people just watching Hulu on their mobile device?
Well, don't get me wrong. I used Hulu as an example. I'm not
Okay.
saying that Hulu is our primary focus of lead generating right now. You know what I mean?
Understood.
That's just a path that we can show videos on and get some traction and some calls and some landing page traffic, et cetera. But yeah, I mean, it's really just, like I said, Tony, it's like, where can I show a video? Like even Twitter, like if you look at Twitter, if you go actually use Twitter, which isn't really that beneficial in the insurance space overall, like in general, I don't hear a lot of people talking Twitter in general in the insurance space.
Yeah.
You'll go look and you'll see about every third or fourth or fifth ad is some kind of retirement or life insurance or something like that. And so, I love Elon and what he's doing. And, we've even had a little bit of results with TikTok, so,
Okay.
the agents base on TikTok and the age range is super low on TikTok.
Sure.
But yeah, I mean, anywhere we can show a video.
Makes sense. I did have another question come in. Any recommendations on a budget in that space?
Yeah, man, $2,000 to $4,000 a month is where you need to be. Like if you're a life insurance agent that sells advanced markets, you give me 2,000 to 4,000. Ideally, like if you had to say what's the ideal budget exactly, I would say 4,500 a month. Give me $4,500 a month. I'll guarantee you 20 pre-booked retirement appointments, and I'll guarantee you 50 life insurance conversations and opportunities on that budget. And you will get a return on investment. That was only basically $1,200 a week or so,
Okay.
$1,150. That's like the sweet spot. People end up at about 4,500 a lot of times. And then what ends up happening is, instead of them going from 4,500 to like $8,000 a month, which sometimes that happens as well, what'll happen is they kind of stay at 4,500 and then they add other agents onto their same strategy. So we'll grow a budget like $4,500 at a time or whatever. Does that make sense? But it's typically one person is not really consuming much more than $4,500 to $7,500 a month.
Okay. Makes sense. Well, man, thank you so much for coming on. This has been a great episode. Lots of great information. We got some good questions in there, good engagement. I've got that link up in both the LinkedIn comments and the Facebook comments. So if you want to chat with Landon, you can click that calendar link, jump on his calendar. And we've also got the strategy link that you had mentioned earlier with Jeff on Kindness that kind of goes through all the details. So
and that's my personal strategy session calendar. So you'll actually get me if you book with that. So I only throw that out for people that I love, like you, Tony. So if you book on that strategy session, you're going to get me. And then we're going to kind of talk through some things. But let me know if I can help and serve. Your point earlier about, don't be a salesman, be an educator.
Yeah.
That's the whole point of this marketing world right now. People work with people to educate them in general. So that's what we're doing.
Beautiful. And then one final question that came in right at the end. Can you still dunk?
Yes. Yes, I can.
There you have it, guys.
I have to warm up my knees because I might break my freaking knees in half, but no, I still can.
Good deal.
So I appreciate you having me, man. Thanks for everything. We'll talk soon, man.
Absolutely, man. Thank you guys for tuning in. We're here every Tuesday. That's Landon Mccarter, the Tower of Power. We're going to be back next Tuesday with Matt Murray. So that'll definitely be a action-packed, probably very humorous episode. And we look forward to seeing you then. So until then, have a great week, and we'll see you next time on Tuesday Training.
Boom.